Thank you for joining us at xm.com for this Forex Preview video. I'm Cristina Marujas, and joining me today is Cristina Barthenidu, investment analyst. We'll be having a look at the European Central Bank minutes out on Thursday. Cristina, we saw the ECB recently reacting to the rise in yields, unlike the Fed, by increasing its bond purchases under the PEP program. What information should we look for at the minutes of that meeting?
Hi, Christina. Well, I think the focus will be on how large the approval of the increased bond buying was at the March meeting. Christine Lagarde has repeated several times that the bank will not deploy the full amount of the PEP program, which has been extended to 1.85 trillion euros in December. But during her interview with Bloomberg last week, she admitted that the bank could use the full amount and even expand the envelope if needed, saying that the bank has the tools to fight any challenges coming from markets. So that creates some questions about whether other ECB policymakers would agree to further increase bond purchases, especially if the rally US Treasury yields keep driving Eurozone bonds higher. To explain that, although Eurozone yields remain in the negative area, higher yields still result in higher corporate and government borrowing costs. So that goes against the ECB's policy to keep interest rates low. So in order to keep those costs low, the ECB decided to increase its bond purchases, and that made the bond program more expensive for the ECB. However, the yield rally is still in play. The 10-year Treasury yield remains elevated around 1.70%, so probably the bank may need to be prepared for additional bond purchases if that rally steepens. And in this case, we would like to know if policymakers can provide their approval or reject that scenario and instead put the ball in the fiscal court where things are more complicated. Unlike the US, which has released $1.9 trillion of fiscal support and is preparing to release another one, actually a larger one of more than $2 trillion. In the European Union, more than half of the member states have yet to submit their ratification for the 750 billion euros fund recovery, which was proposed back in July. The focus now is on the German court, which seems to be delaying the process, but generally the debate within the bloc of 27 members is expected to be tough. So currently it seems that the final decision on the fund may take more months, and that could hurt the union, which is well behind its vaccine schedule and may need more liquidity to finance consumer and businesses if the pandemic keeps pressuring the economies.
Therefore, Cristina, how do you think the ECB minutes might affect the euro this week?
Well, I think the minutes will bring nothing new to the table. The PEP program has around 900 billion euros unused, so there is some space to increase bond purchases within the program's limits. Of course, if the bank keeps speeding up its bond buying, the program will expire earlier than the March 2022 deadline, particularly if the monthly amount of purchases surpasses 75 billion euros, and that would be negative for the bloc if the pandemic is not contained by then, and probably that could signal an early monetary tightening at the wrong time. So if the report reveals that the majority of policymakers would support additional bond purchases within the program's limits, but an expansion is not necessary, then the euro may gain extra ground this week. Otherwise, if the minutes signal that an expansion in the PEG program is possible, then the euro could shift to the downside.
Cristina, thank you for joining me today. This was a Forex Preview on the European Central Bank minutes here at xm.com.